This is the Wealth Roundup with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. Any postings and or social media content are the views of the advisor and do not necessarily reflect BMO's position or viewpoint. The information herein is for Canadian residents only and does not constitute any financial, legal, tax, investment, or other advice. Welcome to the Wealth Roundup for the week of July 16th with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. Patrick, good to see you. It's been a couple of weeks since we've spoken. Little time off for you, little time off for me. Well-deserved, of course.
Yeah, feeling refreshed and looking forward to the rest of summer.
Since we last spoke there toward the end of June, there's been a lot happening with the markets. All of the indexes have gone up anywhere from 3 to 5%. I guess Bitcoin is also a big story, reaching $120,000 Canadian for the first time. That was just happened recently, I think yesterday.
Yeah.
But lots going on in the markets these days.
Yeah, you're right. You know, in general, Canadian U.S. markets are now sitting slightly above mid-single digit returns year to date. Pretty impressive. You highlighted Bitcoin. You know, I think the catalyst there for Bitcoin, I think, is twofold. More institutional participation, along with the U.S. president's openness to creating a leading cryptocurrency economy, being the U.S. So the U.S., them wanting to be a leader. And then the third reason, as I'm adding a third, which probably isn't necessarily a positive, is investors looking at U.S. deficits and saying, where can I invest where I have a storage or a preservation of wealth? As the U.S. takes on more debt, we get concerned about the long-term ability of the U.S. to pay their debts, which brings into question the security and their safety of U.S. debt and the U.S. dollar. So these things help prop up Bitcoin. In the market, we look for catalysts. I think the other big news today was U.S. CPI came in. So this is a measure of U.S. inflation. It ticked higher. It's where we thought. We were expecting to see some pass through to the tariffs. So we're starting to see that. So prices going up. And for those that have been kind of watching this, Trump kind of calling out the Fed chairman, really kind of pressing him to lower interest rates, talking about firing the chairman, talking about going in, finding a shadow Fed to constantly criticize the Fed. This announcement today only really gives Chairman Powell more power to say, we can't cut rates yet. We have inflation. So we expect the U.S. Fed to hold the line on their next meeting, which is July 30th. Jamie Dimon, who's the CEO of JP Morgan, I think I'm certainly one of those people out there that the smart money, the institutional money looks at. His support for the Fed this week, I think, was really telling. So this is going to be interesting because this now draws the president and his plan for trying to push interest rates down, makes that more difficult. So we were expecting the markets to be kind of shaky this week on some of that news, but markets kind of continued to push up. So good thing for investors in equities and Bitcoin.
Okay. Dividend income. What is it and why is dividend income important?
I've been in this business for almost 30 years. And, when I first got into the business, looking for dividend income was a really important characteristic of an investment strategy. So basically what dividend income is it's a way for corporations to pass through a portion of their profits to shareholders in the form of usually a quarterly payment. Now, as a portfolio manager who looks at the market and looks at fundamentals, a business that has a dividend program is a sign of overall health of a company. If a company can afford to have a dividend strategy, it means that A, it's profitable right now, and B, the business believes that it'll continue to be profitable in the future. And because dividend income tends to be a payment that comes with a pass-through of earnings after the corporation has paid taxes, once it lands in the hands of investors like you or me, it's already been taxed once. So it generally attracts some more affordable taxation in the eyes of either Revenue Canada or the IRS. Where dividend income also is really important is for investors that are looking for a way to harvest some of the gains that they're making on their investment. So you can participate both by the stock continuing to hopefully rise over time as investors believe that the company is growing and that there's going to be the profits and net earnings are going to increase down the road. But it also allows the investor to take off some capital, which would be great if they're in a stage of their life where they need their investments to start paying them. So in Canada, we like dividends. Europe really likes dividends. The US tends to be focused more on capital growth. So when we think of the equity market here in Canada, the Toronto Stock Exchange, is that we would generally say that historically dividends make up almost 50% of historical returns. So if you look at the long term or say maybe the last 15 years return on the TSX, I believe the average is somewhere in around say 7 to 7.5%. Almost half of that is coming to you via dividends. So very important part of your return and also very good, call it a measuring stick for forecasting where we think returns might be in the future because we're probably looking at a healthy business. Now, on the flip side, you can't just look at dividends because dividends tend to be a set dollar amount per share. And sometimes you can go and look and you can say, wow, relative to the share price, this dividend looks quite high. So it does require some due diligence to say, does this dividend look very high because the company's stock price has been falling? Because that can make a dividend look artificially high. So just having a dividend isn't in itself 100% called gold star for being a good investment, but certainly something where investors would want to filter out some both good and bad ideas. So we generally like dividends for a lot of reasons. It's good for people that are retired or starting to build a retirement nest egg. And it's kind of just one of those tools that we can use to find good places to put our capital.
Okay, great. Cybersecurity for our finances.
Yeah, it seems like almost you can't go by a certain week without hearing that a major company has had a data leak, or you hear about a business that has had to go through an event like ransomware, where a bad actor has gotten a hold of some of the key company data and is now threatening to leak it. So I think we have to be very cognizant about protecting our private information. I think that sometimes we maybe focus on too much on thinking that the best way to protect my information is just to make sure that the documentation that we have that has our private information on it is either properly stored or shredded. And so here, at a financial institution like BMO, it certainly is something that we talk to our clients about is protecting their documents, protecting their information. But more likely what we're seeing bad actors finding ways to contact, people that are kind of out there at risk. So, like seniors who are perhaps a little bit more vulnerable because, we have technologies constantly changing, and kind of dealing with a bank or dealing with a major company might mean that you're part of a loyalty program, or that you have some passwords, and that maybe you have somebody that is wanting to update your passwords. I think there's kind of a couple key things to think about is that generally if you're ever called or emailed by an entity that's asking you to reset your password, generally banks, corporations, they'll never call you and ask for you to change your password online. And so what they may do is they may call you and say, we've had an event, or they may email you and say, we've had an event. We want you to either call into our 1-800 line or go to your customer portal and update your passwords, but you should never be sharing any of your password information over the phone. And that seems like it's just so obvious, like who would do that? But we have seen cases that are very elaborate where the person on the other line of the phone is very convincing that they're there just to help. And so just a rule of thumb is that if you get a call like this or you're contacted like this, is just to try to exit the phone call as soon as you record as much information about what you've been contacted about, but then contact your institution yourself. Start by either a 1-800 line that is on some of your statement or the back of your bank card or the back of your credit card, and then or going into that institution. The other thing that we have seen quite frequently is when there has been a data breach where bad actors have participated, probably in the most damaging way is that they have taken things like names, dates of birth, and social insurance numbers to go and open credit facilities with your information. Basically, they go and open up a credit card in somebody else's name. Now, again, the best way to prevent this is to protect your private information. But also, what has become more popular is for individuals to go out and either purchase or have their financial institution have some type of credit monitoring attached to their banking. And what's how this basically works is that there's kind of always a watchdog looking to see if your social insurance number, name, and date of birth has been used to open up a piece of credit. And in general, any type of piece of credit that's opened up, either Canada, the United States, or Europe, requires some type of a credit bureau check. And there's a number of these major credit bureau companies like TransCanada Credit, which provide this information to financial institutions, and they will flag when there is a case where someone has tried to access your credit. So important to have one of these. This is kind of like having a security system at your house, or to having antivirus software on your computer. You should have one of these credit monitoring services. And if you get any notifications that perhaps your credit has been used improperly, you get on it right away, that you investigate it right away by going and signing into the link yourself, not going and following a link that's maybe been provided to you in an email that would require you to do a sign in. Is to be very familiar with how your credit monitoring service works, to keep it updated. I think that that's something that is just the new reality of how we have to operate to go in and protect ourselves from cybercrime.
Lots of things to do. A two-step verification, and
Yes.
also keeping an open line of communication with people who might be in a vulnerable situation, as you mentioned, like, for instance, seniors. So making sure that they're aware that there are scams out there on a regular basis and don't be susceptible to them. Very good. Thank you, Patrick. This has been the Wealth Roundup for the week of July 16th. Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. We'll talk to you next week.
Have a great week, Terry.
This has been the Wealth Roundup with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. I'm Terry Evans. The Wealth Roundup is part of the Reluctantly Podcast Network.